The prior administration was sort of openly hostile to Bitcoin and crypto. There was a sort of real political organizational effort around the 2024 election to change views about this, electing pro-crypto, both Democrats and Republicans. And I think the industry in general has been able to really stand up, and we went from playing defense to playing offense. There's a real sense that like this is our chance. This is go time. We're having conversations with agencies, everything from the War Department to the SEC, about what a good Bitcoin policy looks like. I do think Bitcoin instantiates American values of freedom, financial inclusion, individual liberty better than any other asset. What's the sort of gigabrain move from a geopolitical chessboard perspective? It is the United States government making the decision to directly monetize Bitcoin as a reserve asset to the benefit of the United States and to the detriment of our geopolitical rivals who have been investing all their capital in gold.
Hey everybody, today on Treasury Orange, we're talking to Zack Shapiro. Zack is an alumnus of Yale Law and managing partner at Rains LLP, a tech and crypto-forward law firm. He is famously head of Bitcoin policy at the Bitcoin Policy Institute, or BPI for short. BPI is a think tank doing the work of orange pilling the U.S. government and policymakers. Zack, welcome to the show.
Thanks so much for having me.
So Zack, the BPI is working to orange pill governments and institutions and policymakers. So for those unfamiliar, what exactly do you guys do and why does it matter?
Yeah, so BPI is a think tank and policy shop sort of built around the idea that Bitcoin is important. It is a important subject of policymaking. And our mission is to both convince policymakers to take this issue seriously and to provide our views on what we think good policy looks like. My particular role in BPI as head of policy is to think within sort of the sort of Bitcoin space, what are the issues that we should care most about and what should our particular stance on each of those issues be?
Really cool. So Zack, just to give you a little background about myself, I used to be a banker by trade. I managed a retail and later commercial portfolio for small regional banks. And a lot of times, you know, when you're a revenue generator for the bank, you kind of find yourself at odds, you might say, with your compliance department at your institution. And that's kind of downstream of some federal regulations, like requiring, you know, customer due diligence and know your customer laws. Sometimes you have to dig really deeply into their financial transactions and their background. So what are some of the landmark laws, would you say, that BPI kind of wrestles with? And, you know, I know a lot of those laws were written for an era before Bitcoin existed. So how do you navigate that as someone who's head of policy at a think tank?
So at BPI, we're really dealing with sort of laws and regulations that we would like to see in the future and the changes that we want to see from a policy perspective, which is sort of different than what I do in my private practice, where I'm dealing with the laws and regulations that are currently on the books and helping companies navigate those. From BPI's perspective, our sort of two biggest policy areas at the moment are first, how can the United States government leverage Bitcoin for its objectives? I think it's no secret that we're going through a period of transition where we're moving from a regime where US Treasuries specifically are the dominant reserve asset all across the world to a regime where it's not just going to be treasuries. Treasuries have shown themselves to be less credibly neutral than they have in the past, especially around the 2022 action of freezing the FX reserves in Russia. They've also been shown, because of our monetary policy, to be sort of less of a good store of value than they had been over previous decades. And so we're moving to a world where hard assets are a bigger part of the story. That obviously includes gold. We also think that's going to increasingly include Bitcoin. There might be other countries' fiat currency sort of in the mix. And so we want to help the United States navigate crossing that chasm from sort of this unipolar reserve asset world to a multipolar reserve asset world, including hard assets. Or the sort of landmark piece of that is the sort of concept we came up with of a strategic Bitcoin reserve. And we've had some success there, including the president's executive order establishing a strategic Bitcoin reserve. We're working on various ways to fund that and make sure the United States government holds Bitcoin. And in some sense, that is about making sure that the United States government deals with this transition well in a way that helps American citizens and preserves our power in the world. Our values are broadly pro sort of liberalism. We believe in individual rights and freedom, and we think a lot of that is instantiated by the way Bitcoin works. And we're also broadly pro-America. We think that the United States is a force for good, and we want what's best for the United States. Now, we also think that one really important downstream effect of having something like a strategic Bitcoin reserve is that in a world where Bitcoin plays an increasingly large role sort of at the geopolitical scale, which we think is going to happen no matter what. The United States government is going to treat Bitcoiners better, and it's going to be better off for American Bitcoiners if the United States government sort of has a bag of its own. And we're not going to see the type of confiscation we saw with gold, almost 100 years ago with Executive Order 6102. We think that that will be helpful in making sure that Bitcoin developers are not prosecuted by the United States government for writing neutral code. And so that sort of brings me to our other big policy area, which is helping think through what illicit finance laws should look like for a world where blockchain technology exists. So there, the sort of incumbent piece of regulation is the Bank Secrecy Act and all of the regulations promulgated around that, which were written at a time where when you moved money electronically, necessarily, it had to be done through an intermediary. Right? When you send someone money on Venmo, it feels like you're sending money directly from your phone to their phone. But as your listeners probably know, that's not how it works, right? Money is going from, your phone, which is really an account with Venmo, to one bank, to another correspondent bank, to another bank, and eventually to the bank of the person who's on the other end of that transaction. And each of those banks are regulated financial entities. They're money service businesses to whom the Bank Secrecy Act applies. With blockchain technology, right, including most importantly Bitcoin, that's not how it works. Bitcoin and blockchain more broadly is a peer-to-peer technology. In between, when I send you Bitcoin, there's no intermediary in the middle. That's the whole point of Bitcoin. It is me and then software in between us and then you. The problem is that this software, right, starting with the sort of base layer Bitcoin blockchain, but also including tools built on top of it, like eCash, like CoinJoins, like the Lightning Network, in crypto, things like smart contracts and decentralized exchanges and automated market makers, this code can start to look a lot like what regulated financial intermediaries used to do. And so there is a temptation by the government to regulate this code as if it were the type of financial institution that this code is replacing. However, when you try and regulate code like you would an institution, the whole thing sort of breaks and you get to what I think are very un-American and sort of undesirable outcomes where you're sort of pre-prescribing what code people are allowed to publish on the internet. And then when you're holding sort of the makers of that code, the makers of these tools, criminally responsible for the way that people use those tools in a way that we don't normally do with other tools like laptops or USB cables, which people use for crimes all the time. But we don't say that if someone commits banking fraud using, a MacBook Pro that we're going to, throw Tim Cook in prison. Like that doesn't make any sense. And so too, people who create sort of, non-custodial wallets for Bitcoin, they should not be responsible if someone uses that non-custodial wallet for crime. We should hold the criminal responsible. So that is a thornier. It sounds, I think, when you lay it out that way, pretty simple, but it gets thornier in practice. And we've seen cases most famously involving Tornado Cash, which is an Ethereum privacy tool, and Samourai Wallet, which is a Bitcoin privacy tool, where the government actually is prosecuting developers for this kind of activity.
Yeah. Obviously, we've had a lot of bullish signals in the last year. I would say the government's changed its posture towards Bitcoin. Famously on the campaign trail, Donald Trump said he's going to be the Bitcoin president. You've got people in the Senate, specifically Senator Cynthia Lummis, who has backed some strong pro-Bitcoin legislation. I saw that Warren Davidson in the U.S. House of Representatives, he's a rep from Ohio, introduced a bill for Americans to pay taxes in Bitcoin. That's something maybe we can talk about in a bit. But how do you see that landscape changing, and how is your work with BPI changed in the last year, Zach, with an administration and government that is, I think, more open to having those conversations about Bitcoin as a neutral technology for all Americans?
Look, I mean, it's absolutely a night and day difference, right? We went from playing defense to playing offense. The prior administration was sort of openly hostile to Bitcoin and crypto. We saw that through the SEC. We saw that through certain actions of the Treasury Department. There was sort of an attempt, actually, in Trump 1 to effectively ban non-custodial wallets, and there was a sort of real political organizational effort around the 2024 election to change views about this. And a lot of the credit for that goes to David Bailey, who really saw this early, to the Fair Shake PAC, which was organized by Coinbase, which really helped at the level of congressional elections on a bipartisan basis, right? Electing pro-crypto, both Democrats and Republicans. And I think, the industry in general has been able to really stand up and have a voice in a way it hasn't before. And that voice has been heard. And so the previous administration, it was really, the through line between what happened before and what's happening now is most people just don't understand Bitcoin, right? It's counterintuitive. It seems like a scam. It seems like clunky technology, right? People don't really think about what money is. And so most of it is still an educational mission of like, here's how it is. Here's how it works. Here's why it matters. Like that is the same. What's different is sort of the desire about what to do with it, right? Before it was like, here's why it works. Here's why it's not a scam and just used by criminals. And so please don't pass bad laws. And now it's, here's, what it is. Here's how it works. Here's why it matters. And let's think about how we can leverage it for the benefit of the United States. It really is sort of trying to move the ball forward. And there's a real sense that like, this is our chance, especially, up until the 2026 midterms where, sort of the politics get reshuffled a little bit. This is go time. And so we've seen the passage of the Genius Act, which is about stablecoins and not Bitcoin. But I do think stablecoins are an important on-ramp to Bitcoin. I think they're symbiotic with each other, and sort of stablecoins being integrated into the economy, I think eventually leads to people understanding the role that Bitcoin will play. And then the other piece of legislation is the Clarity Act, or the market structure bill, most of which is about sort of the rest of crypto other than Bitcoin. But there are some very important parts of the Clarity Act that protect software developers working on Bitcoin tools, including Bitcoin privacy tools and L2s that pass through the United States House of Representatives, is in front of the Senate, and that the White House will sign into law. And then behind the scenes, we're having conversations with people sort of up and down the executive branch, from the agencies, everything from the War Department to the SEC, about what good Bitcoin policy looks like. And that stuff, a lot of it is less public than the legislative piece. And so there's less of it I think I can talk about in detail. But that stuff is equally impactful, and it happens a lot more quickly than the sort of landmark legislative efforts.
That's really cool. As a Bitcoiner, I'm really glad someone's really working hard behind the scenes to educate agencies, lawmakers who, they don't have a lot of bandwidth to understand all the complex topics that are put in front of them every day. And I think that's something that's really underappreciated in today's environment. You mentioned earlier, Zack, that Bitcoin is really kind of like an American technology, and whether or not Satoshi was American himself, he certainly was influenced by, I would say, American ideals. Now we've got legislation out there from Cynthia Lummis, who wants the United States to consider a strategic Bitcoin reserve in America. And as you say, we've made some progress on the regulatory front, and there's still a lot of work to be done there. But I think America is eventually going to kind of come to an inflection point where they're looking beyond the regulation and going to have to make a choice on how it views Bitcoin as a neutral reserve asset. You also mentioned that, the dollar's reserve status, or the US Treasuries reserve status, is kind of maybe being weakened across the globe. So does Bitcoin threaten that reserve status? Does it strengthen it? And how would a strategic Bitcoin reserve, kind of affect that conversation, Zack?
Yeah, so let me answer the last part first, because I think it's the clearest. Bitcoin doesn't threaten the Treasury Reserve status. I think monetary policy does, right? Like, I think the writing is on the wall that, like, we're going to print more dollars, just the ratio of debt we have to GDP. We don't want to cut government spending. We don't want to raise taxes. The only escape valve is money printing. Like, I think that's baked in, and that is the biggest piece of it. And the other piece of it is sort of aggressive foreign policy using treasuries. I think those are the things that are driving diversification by foreign banks, including the People's Bank of China, into assets like gold and into other FX reserves. I think Bitcoin is the best shot we have at protecting sort of United States power, soft power, in terms of reserve currency status. China is stacking a lot of gold. That's been all over the news for the last year. We did a sort of research report with a Bitcoin exchange called River, where we looked at sort of the distributions of gold and Bitcoin ownership. And disproportionately, I don't know if Bitcoin's an American technology, right? Whoever Satoshi was, they were trying to pass themselves off as Japanese. I do think Bitcoin sort of instantiates American values of sort of freedom, financial inclusion, individual liberty, sort of better than any other asset I can think of. But also, Bitcoin is held very heavily in the United States, right? The holders of Bitcoin disproportionately are American individuals, American companies. And so if you want to, like, what's the sort of gigabrain move from a geopolitical chessboard perspective, it is the United States government making the decision through something like Senator Lummis's Bitcoin Act to directly monetize Bitcoin as a reserve asset, to the benefit of the United States, who would at that point hold a Bitcoin reserve, to the benefit of American companies and individuals who are Bitcoin holders, and to the detriment of our geopolitical rivals who have been investing all their capital in gold, right? It's like a pretty strong 1-2 punch. And I think that makes a lot of sense. And then alongside Bitcoin, I think stablecoins are a very important technology that provide a bid. They provide a source of demand for US Treasuries, for our sovereign debt, because overwhelmingly, companies like Tether and Circle back their stablecoins with US sovereign debt. And the combination of those two things can help export American soft power around the world. We're spoiled in America. The sort of middle class average American, to the extent they have savings, those we know we can't save in dollars, right? But we can have a sort of, the risk off savings in the form of a savings account, hopefully with a decent yield attached to it. And we can have risk on savings in the form of, our home equity, or, DCAing into the S&P 500 in our 401k. Those are not opportunities that are available in many, many, many parts of the world, right? You can't get access to US bank account or dollars. Maybe getting access to physical dollars is really dangerous, right? Because you have sort of capital controls in the country. You don't have access to American stocks easily. And if you did, like how would you liquidate them? That's really hard. And then you don't have property rights for real estate. But if you have a smartphone, and smartphones are cheap and ubiquitous basically everywhere on earth at this point, you can get one for I don't know, $20 in a lot of countries, a basic one. You can hold an infinite amount of Bitcoin or stablecoins by learning 12 words, right? That is an incredibly powerful decentralized technology. And the proliferation of those two assets, I think, is very good for U.S. soft power, because the stablecoins basically are a claim on our sovereign debt. Those proliferating in the world creates source of demand, and then Bitcoin is sort of overwhelmingly held by Americans and fits with the American sort of free market, individual liberty way of doing business, less than sort of like the Chinese top-down command economy, CBDC, surveillance state way of running things.
Completely agree. Well said, Zach. What's the biggest challenge you face when you talk with maybe people inside the government or policymakers?
It's education. It's always education. People, who listen to 40 hours per week of Bitcoin podcasts sometimes forget the learning curve that it takes to hear these things, right? The difference between Bitcoin and a meme coin isn't obvious to most people. The need for something like Bitcoin, the idea that money is broken, would never occur to most people, including most policymakers. I think there's a vague sense out there in the economy that like something is wrong, something is broken. It's harder to get ahead than it used to be. Assets are unfairly distributed in general, and especially unfairly distributed between generations, right? The boomers own all the property, and it's hard if you're younger to buy a house. People have a sense that inflation is too much and is a bad thing. But the, history of like money wasn't always a dollar. It used to be things like, livestock or salt or seashells or glass beads. And then we moved to precious metals, and that wasn't a random walk from one money to the other, that there are objective properties of money that makes some money. But like that whole thing is not a meme that most people know. So like the first challenge is making sure, okay, like Bitcoin is different than this other stuff, right? Bitcoin is meant to be a form of money, and it's the best form of money because of its intrinsic properties, because of the fundamentals of what Bitcoin is and how it works. And like that is sort of the work of orange pilling, but that's step one, and that just takes time. So that's the hardest part. Politically, the sort of two most acute, difficult things that we contend with. One is with Democrats, and we do need to, the Republicans have been quicker to embrace some of the stuff. It should not be a partisan issue, right? Like there are lots of things about Bitcoin that are progressive. It promotes financial inclusion. It is fair, right? If you own 1 cent worth of Bitcoin, you have the same sort of rights vis-a-vis the network that someone who owns $1 billion. Like there's a lot of progressive things about it. It stops money printing and wealth inequality. But with Democrats, there's the association between crypto and Trump. And there's a real worry if Democrats want to support things like the Clarity Act, that they're enriching the Trump family. And so we have to explain, well, like, look, the Trump family also owns a bunch of real estate, famously, right? And we wouldn't have bad housing policy and refuse to build houses because we're worried about the Trump organization making money. Like, that's a separate question. If you want to address corruption, do a corruption bill. But like, we can't, mess this up. The other challenge, specifically with sort of developer protections, is concerns around illicit finance. And look, there are real concerns around illicit finance, right? So the whole reason that Tornado Cash came to the news in the first place is that the North Koreans seem to have used it to launder $600 million of hacked proceeds from a crypto video game called Axie Infinity, and maybe they use some of that to fund their missile program. Nobody likes that, right? People do use Bitcoin and privacy coins and stable coins on the dark web sometimes, to fund terrorism, in, child exploitation, all sorts of horrible stuff. That's a real problem that we need to acknowledge. One of the things we've been focusing on a lot recently are what are called pig butchering schemes. This is something that everyone listening to this podcast will have personally been a victim of, right? We all get those fake wrong number texts like, hey, Sally, great seeing you doing that. And the way that works is most people ignore it. Some percentage of people text back, oh, this was a wrong number. And then the other person strikes up a conversation and they try and take it either towards a friendship or some romantic relationship. And then they say, hey, I'm making all this money crypto trading or FX trading. And if you send me, X amount of Tether or X amount of Bitcoin to this app in the Google App Store, I can show you how well you're doing. And it looks on paper like you're making a bunch of money. And then there are taxes you have to pay. And they try and squeeze you for every dollar you can, and then they steal the money. They rug pull you at the end, and that's sort of fattening the pig up before you butcher it. That's where the name comes from. That's really bad. And I totally get why we need a policy response to those things, acknowledging that, and at the same time being regulating non-custodial infrastructure, regulating software wallets or hardware wallets that just allow you to create your own key, regulating coin joins, which are just transactions people do collaboratively to give themselves a little bit of privacy, because you don't want the guy that you bought the proverbial cup of coffee with Bitcoin to know your net worth and everyone you've ever done business with, or your salary or anything like that. That's not the right way to go about it. And we need, thoughtful, targeted laws for the 21st century, presuming that peer-to-peer electronic transfers are possible thanks to Satoshi, and not using sort of the 1970s model of how money works, which is when these laws were written.
Really cool. Has your job become easier with the launch of the Bitcoin ETFs? And of course, we had Michael Saylor kind of kickstart the Bitcoin Treasury phenomenon, 5 years ago. And we've seen a lot of embrace by Wall Street and other Bitcoin Treasury companies kind of spin up over the last year. How has that, might I say, legitimization by some in the finance industry changed those conversations you're having with policymakers, Zach?
It's definitely really different. It has changed the conversation in that more people see Bitcoin and crypto as a legitimate asset class. Maybe they don't understand it, but I noticed this a lot in my personal life, right? All of a sudden, since the ETFs came out, all my friends own a little bit of Bitcoin, right? It's the career risk around this is gone, and it's seen as more mainstream. And I do think you correctly point to the ETFs as the turning point for that. I think that was the sort of 0 to 1 moment where it went from this is a fringe crazy thing, right? People think about Bitcoin the way we might think of meme coins, to people think about Bitcoin the way we think about the NASDAQ, right? It's a real thing, right? Maybe you're bullish, maybe you're bearish. Everyone has their own take, but it's real. And so that is palpably very different. That also means that the critics of Bitcoin, the people who are against it, are sort of more agitated and take, that issue more seriously as well, right? There's a lot of worry about sort of systemic collapse and corruption and stuff like that. But I think what you say is more or less what I'm seeing both in my personal life and my sort of law practice and my policy work with BPI, is that since, the ETFs launched at the beginning of 2024, Bitcoin is seen as, a real thing.
Cool. Maybe taking off your BPI hat for a second, Zach, what do you think about these pure play Bitcoin treasury companies? Here at Treasury Orange, we've got a audience who's very interested in these equities and in the kind of digital credit products that they're building out. Do you have any thoughts about that as a Bitcoiner?
Yeah, I think it's pretty hard to paint with a broad brush on the treasury companies. I think a lot of them are very different from one another. I mean, I assume by pure play treasury companies, you are meaning to exclude sort of profitable operating businesses that are primarily operating businesses and put Bitcoin on their balance sheet. And you mean companies that are sort of formed for the purpose of holding Bitcoin and increasing Bitcoin per share. I mean, they're doing pretty poorly right now. It's not been a great couple of months. I guess the question is sort of why they're there and what they're there for. And to me, it looks, pretty different when you're talking about a company like MicroStrategy that was very early and seems to be able to do sort of real volume on their preferreds. And that is the engine behind it, right? They have a view on Bitcoin going up more than 10% per year, and they are finding lots of different ways to offer people 10% yield to give them money to buy Bitcoin. And if they're right about that trade over the long term, that becomes like a really interesting source of leveraged exposure to Bitcoin, where you create different pools of demand for people that need different types of cash flow, right? Whether it's cash deferred, whether it's, dollars hitting your account. It's a bet one can make. Then there's sort of the long tail at the other end of like, we're going to do one of these in every jurisdiction. I'm not sure why we need one in every jurisdiction. There are some jurisdictions where you sort of get a boost, right? Like famously, Metaplanet for a time was doing extremely well, in part because of tax treatment of Bitcoin in Japan. But I just think that's a riskier play. And then there are some companies that are sort of in between, where like 21 and ProCap have are bigger ones, where they both sort of announced they want to do operating businesses that are core to the strategy, and I would reserve judgment on those until we see sort of how those businesses operate. Living my life on sort of a Bitcoin standard and denominating Bitcoin has done very well for me, right? What do I do to increase the sort of number of Bitcoin that I own? Theoretically, that should work well for companies. The question is like, all right, do you have a credible strategy to do that? Or are you hopping on a trend where people were looking at launches of treasury companies where you get this incredible retail pop and people are giving you, 8, 9x MNAV because who knows? That era seems to be done. I do a decent amount of work through my law practice, both representing in a couple cases issuers, but also, in many cases investors in the sort of private part of these things. So your audience probably knows the way these things launch is that you raise a PIPE, an equity investment, sometimes also a debt instrument, a convertible note. You go out and you find a target company, usually listed on the NASDAQ. Usually it's a sort of unprofitable or small microcap company with a board that's willing to be bought out. You hope that they don't have a lot of liability or too bad burn rate for the company, right? So like if you're buying, to take an example, Nakamoto, they bought a company called Kindly MD, which is in the medical space. When you buy a company like that, you need to do a lot of legal diligence to make sure there are not whistleblower claims, right? If like, God forbid, the sort of company was doing, I know for a fact that the very smart lawyers doing the Kindly MD deal, did look into this type of stuff. So when you do a deal like that, you need to make sure there aren't hidden landmines. One of the examples of how this can go wrong, there's a treasury company, and they were unable to do ATMs for a while during a pretty critical period, and their stock took a huge hit because of some bad business deal that partner of the company did, I think, Kazakhstan before they were a treasury company. And so like there's a lot of diligence that goes into the shell, or the operating company. I guess you're not supposed to call it a shell because it needs an operating business to meet this exception. And then you make the investment, and then hopefully the flywheel gets going. And what I've seen over the last year is the level of sophistication of those deals has gone way up. It used to be, if you had some new angle, you're in some new jurisdiction, you've got somebody smart or recognized in Bitcoin world attached, that's enough. And you can get away with pretty extractive economics in some of these cases, right? Like you merge an entity in that is just like a promote vehicle for the sponsors that gives them free equity in the company. You raise at a higher MNAV and you pay yourself lavishly with, options or warrants. I've seen sort of the implied MNAV at the PIPE compress, and investors are like, okay, I need a really good story now as to how this is going to work, and I'm not going to overpay to be part of the PIPE. And so like that has definitely matured. Sorry, I'm really just free associating here now on Treasury company.
It's a really, really good perspective there, Zach, and I know you've got the legal chops too, to kind of talk about those things. And one of the things I'm really interested in to see is, we had Figma go public earlier this year, and they just surprise had $100 million of Bitcoin on their balance sheet. And I think, in the treasury space, any company that's has Bitcoin, whether a private or public company, I think is good, and I think an inevitable part of the adoption curve of Bitcoin. And I'm curious to see if we see some of these larger mega tech stocks adopt at least a small Bitcoin treasury in much the same way that Tesla did during the last bull market.
Maybe. I mean, so that first I would say that that's a different phenomenon than the pure play treasury thing. But
Yes.
then the question is like, why? Why, if you're a profitable operating business, do you want Bitcoin on the balance sheet, right? And if we're like steel manning, all right, what's the reason for that? You're a company, you have free cash flows. Your options are you can reinvest those in the business. oftentimes that's the highest ROI, right? If you're a growing business and you have needs, like you should do that. You can dividend out the profits to your shareholders. Then they can choose what to do with that. That is what a lot of shareholders like. The problem is it's not particularly tax efficient because that gets taxed as ordinary income to the people receiving those dividends. You can buy back your own stock. That has become increasingly popular. That's basically a way to give something that's like dividends, but in a sort of more efficient tax structure because it's your equity value going up and you're not getting ordinary income. Or you could invest in other assets. You can invest in securities, commodities, Bitcoin, whatever. And Bitcoin is sort of in some ways like the best of both of these worlds because it has upside that looks like equity, but it's a commodity. And so you don't run into the same issue with like, are you now treated like a hedge fund? Current drama with MSCI aside for that question. But like individual owners of companies can decide what they want to invest in, right? Like if they want to own Bitcoin, like they can own Bitcoin. Why do you want your company that you're investing in for the sake of that company to hold Bitcoin? And so I don't know that it will make sense for like a company like Apple or Nvidia to have a giant Bitcoin treasury ever. I actually don't see that as an inevitable part of the adoption curve. Where I can most see like a strong case for it is company that like needs to have money on the balance sheet for liabilities far enough into the future that having something dollar denominated is scary because like there's just going to be debasement that makes it more expensive. And so like if a company has a very specific long-term capital need, I think that can be a great application for Bitcoin on the balance sheet. But I don't want like people to get their hopes up that like there's going to be large tech companies that are going to like YOLO into a lot of Bitcoin. I just don't think that makes, even if you think Bitcoin's a terrific asset, which I do, I don't know that that's ever going to make sense to hold Bitcoin for the sake of holding Bitcoin when your shareholders could just do that themselves.
Sure. It's a great point. Putting on kind of my investor hat in Mag 7 companies, I think of a company, I guess Peter Thiel famously has talked about, when a large tech company is sitting on a mountain of cash and they are considering paying a dividend or buying back their stock, that would be an admission that they've kind of run out of ideas as a tech company. Now, obviously, we've seen this wave in AI and there is that capital that was sitting up maybe on Google or Microsoft's or NVIDIA's balance sheet is being deployed into AI. Bitcoin is money, right? So if I do have a company that has money on its balance sheet, I would rather them invest in a commodity like Bitcoin, but
then hold cash. And I agree with what, the Peter Thiel quote, that it is an admission. Like, that's why I started with a company can reinvest the money in the business. And if it's not doing that, it doesn't think it's the highest ROI. But I don't see how buying Bitcoin is any different than the buyback or the dividend. It is something that is meant to increase shareholder value other than reinvesting in the business's own operations. Whereas keeping some amount of Bitcoin to fund specific operations or CapEx that they have in the future, that to me feels different.
Agreed. Agreed. The point is they do need to spend that money at some point.
Yeah,
right?
They shouldn't sit on dollars. No,
and that's that's a real popular thing. Is a lot of like early Bitcoin holders or people who are in Bitcoin very ideologically, which I share a lot of those principles. Say never ever spend your Bitcoin, and I think the whole point of money is that eventually you are going to deploy that capital. You can maybe borrow and die with your Bitcoin, but how do you view that, Zach? Is Bitcoin meant to be spent?
I don't think Bitcoin is meant to be. I mean, like it's meant to be a form of money, right? Like we know that from, the history of the cypherpunks and sort of the prehistory of Bitcoin and the project came out of. But like money is different things to different people, right? And in sort of Western developed countries, Bitcoin is mostly not used to be spent. It's mostly used as a store of value, which makes perfect sense, right? Dollars are just easier to spend. You get rewards when you spend it through credit cards. I use Bitcoin denominated rewards and my own credit cards, but that's just easier and better and frankly more profitable for me than spending Bitcoin. And there are parts of the world where they care less about Bitcoin as a store of value. They have sort of needs today. They don't have a lot of savings, and Bitcoin is much easier to use than the alternative, right? Like if you're a woman in Afghanistan, you can't have your own bank account. You can have your own Bitcoin wallet. And so there are the properties of Bitcoin is something you can spend, right? They're sort of human rights activists around the world. HRF does a really good job. The Human Rights Foundation under Alex Gladstein's leadership does a great job of highlighting the role Bitcoin can play for people that need to receive money in a private and censorship resistant way. And there, the sort of Bitcoin as a medium of exchange is much more important than store of value. But Bitcoin is just, it's a neutral piece of infrastructure, right? It's a form of base money, and people need money for different things. And so I don't know that maybe we don't want to go too much into this territory, but I think any kind of overly moralizing about Bitcoin is meant for this and not for that is completely missing the point of what money is.
Completely fair to say. No, I'd agree with you. So I touched upon the Bitcoin for America Act, just jumping back into policy. So that was introduced by Warren Davidson, a congressman from Ohio. Can you tell us briefly about that, Zach?
Yeah, that was really exciting. So that just dropped last week. We did that sort of joint announcement. And the idea is, all right, how are we going to fund the Bitcoin Reserve, the SBR? One way is, the sort of boldest plan is something like Senator Lummis's Bitcoin Act, where we revalue the gold certificates and buy 1 million Bitcoin over 5 years. That's great. We're very much in favor of that, but that's one path forward that will get some support from legislators and will not be supported by others. Another idea, by the way, there are also a bunch of ways that the president could fund the SBR by executive order. I've been on record arguing that we can use the Exchange Stabilization Fund, which we just used to buy a bunch of Argentinian pesos. To me, from a strategic long-term United States balance sheet perspective, I'd rather hold Bitcoin than Argentinian pesos, but neither here nor there. Another thing we can do by legislation is what we put forward in the Bitcoin for America Act, which has a couple of components. The first is it codifies the Bitcoin Strategic Reserve executive order into law. By the way, it's sort of a pet peeve of mine that when people talk about when are we going to get an SBR, we have it, right? That's what the executive order is. There is a ring-fenced amount of Bitcoin that the government holds that is required under the executive order to be held and is under U.S. federal law a strategic Bitcoin reserve. But a future administration that is opposed to Bitcoin could get rid of that because it's an executive order. So the first thing that the Bitcoin for America Act does is it codifies the existing executive order into law in a way that a future administration can't rug if it disagrees. Second, and this is sort of the biggest, juiciest piece of this, is it allows Americans to pay federal income taxes in Bitcoin directly. And for Bitcoin that you pay for your federal taxes, which you have to pay anyway. It's not creating new spending or confiscation. You do not have any capital gains consequence on that Bitcoin. So you can use very low cost basis Bitcoin to pay your federal taxes. And that's a very, very efficient way to pay your taxes because you're paying a liability to the government you already have, and you're eliminating another liability you would have to the government. By the way, you could then reset your cost basis on that Bitcoin. I'll leave your sort of audience to think through the second and third order consequences. But if you put a little bit of thought into this, tax lawyers are going to have a great time with this one. And I think this is long-term extremely bullish for Bitcoin. And then third, the act creates a minimum 20-year holding period for any Bitcoin that's put into the reserve this way. And again, this is as a matter of legislation. This is not something a future president or executive branch could change on their own.
Yeah, I think as someone personally who doesn't like to spend their Bitcoin, like we talked about, and someone who is also really frustrated by the state of taxation generally in the United States, this bill would be pretty awesome to see.
Yeah, I mean, look, you're both getting a personal pretty big tax benefit. It's great for the United States because of that tax benefit, the motivation is there for them to receive a huge inflow of Bitcoin, which for all the reasons we've discussed is good for the country. And then third, because of the 20-year holding period, especially if you're sort of freedom-minded, you're anti-big government, you want us to get our economic affairs in order as a country, you are putting coins directly into sort of cold storage for the U.S. government for the long term, and you're not funding all of the sort of wide swaths of the administrative state that your tax dollars would otherwise go to.
Sure. I can't say I'd smile when I made my tax payments, but that would
be a little closer.
Yeah, the closest I'd get every quarter. Just real quickly before we close, can you talk about the state of Bitcoin adoption in these strategic Bitcoin reserves that are kind of being talked about at the state level?
Yeah, it's still in the relatively early stages. At BPI, we don't do a lot of stuff at the state level. We think most of the impactful sort of policy for Bitcoin is at the federal level. We did put out a state level SBR toolkit that, on btcpolicy.org, I'm sure you can find it there somewhere. And we wrote a bunch of draft legislative language that was sort of like a choose your own adventure menu style thing for states that want to enact some form of public investment in Bitcoin. And that might look like a standalone SBR, where a state is putting money into Bitcoin and holding it for the long term in cold storage. It might look like bit bonds, right? Where you're issuing some sort of state or municipal debt issuance where there's Bitcoin upside for both the issuer and for the investor in that instrument. It might look like integrating Bitcoin into a pre-existing investment like a pension plan or state retirement account. And there are lots of states that want to do this differently, right? Some states are going to want to figure out the infrastructure for self-custody. Others are going to want to use a federally regulated custodian. And so we basically are like, listen, if you want to do any of this, here's what all of the options are. We pre-wrote the legal language for you. And if you are a state legislator that wants to move the ball forward, just pick from this menu of stuff we came up with. I'll be honest, I've not looked at the states in a minute. I think Texas was the first state to create what they're calling a reserve, and they seeded it with a small buy. There were at some point something like 35 state level bills creating, I hesitate to even call it a Bitcoin reserve because a lot of these were not that. And they included other crypto and they included other commodities. And most of them didn't have actual buying attached to it. And many of them failed. So I would say there is innovation in the states. There was a while where it was looking like the states were going to lead the way. I don't think that's the case now, right? It's just a difference between the politics of state legislatures and the federal government. But I think that totally, I think most state level policies don't move the needle for Bitcoin. I can absolutely see, and I gave a speech at our Bitcoin for America summit earlier this year about why I think it's especially important for states to look at public investment in Bitcoin. Unlike the federal government, states can't print money. They can't issue treasury bills that are the world sort of reserve asset. And they do have long-term liabilities they need to fund, like pension plans. And they're just at the mercy of debasement by the US central bank, the Fed, and by other central banks around the world. So it's a great idea. States should do it. But I think we need a little bit more sort of sophisticated state level thinking about, okay, what does this look like when we say we want to buy Bitcoin? How do we want to buy Bitcoin? How does it fit into sort of the state economic apparatus? I think this is actually a great area for sort of public interest entrepreneurship for Bitcoiners that want to be involved in state politics. It's a lot easier to move that forward. I'd be happy to sort of talk to anyone who's interested in this. We sort of did the homework for any state sort of level politicians who want to make this part of their plan. States are not really leading the way at the current moment.
Sure. Great stuff, Zack. I think one of the greatest things we've seen over the last year is that the Overton window is kind of shifting, and those conversations are happening both at the state level and with your work with BPI at the federal level. So where can people follow you, Zack, online, and where can they follow your work at BPI?
Yeah, so BPI's website is btcpolicy.org. You can definitely follow our work and our sort of academic papers there. You can find me on Twitter at Zack B. Shapiro, ZACKBSHAPIRO. And then I guess the one thing we haven't talked about, but I think is really important here is if Bitcoin is going to work and it's going to scale and it's going to do all the wonderful things that we want it to do, there's a lot of building that's required. I think the policy and legal work is really important, but in some sense, it's sort of this is a cypherpunk movement. And my work is a little bit of a rearguard action to protect the people that are actually going to win this for us, which are the developers and the builders, which is why, I also make sure to carve out a lot of my time to do my law practice. I think we need many more Bitcoin startups. We need people to build stuff. And I'm really excited that I get to support the people who are building incredible payment solutions for Bitcoin, privacy solutions. I work with the eCash companies. I work with ARC companies. With, one of my favorite clients is Anchor Watch, which is doing Bitcoin insurance. What they're doing around sort of multi-institutional custody is super cool. And we need more people to do that stuff. And there is a burgeoning ecosystem of Bitcoin-focused VC, investors who want to back Bitcoin companies. But the pool of good Bitcoin companies is unfortunately still very small. So if you're someone who has a relevant skill set, I totally encourage you to go work at a Bitcoin startup. If you can, reach out to me and maybe I can help make connections for you. Even better, if you want to start a Bitcoin startup, I'm always happy to have that conversation with folks. And I've helped a lot of people raise money for Bitcoin startups and set up companies. And, for people who are interested in that sort of entrepreneurship focused world, whether you want to sort of invest in Bitcoin startups or work at a Bitcoin startup or create one, you can reach out to me directly by email at zack@rains.law, ZACK@RAINS.LAW. And, I really sort of prioritize in my legal practice helping move the actual sort of entrepreneurship and development angle forward.
Amazing work there, Zack. And one thing we have all our guests say before they leave is stay orange.
Yeah, stay orange.
Ladies and gentlemen, one of the members of the vanguard, or perhaps the rear guard, fighting for your self-custody and privacy rights in Washington, Zack Shapiro.
Thanks so much.